Happy Friday, ladies and gentlemen, and welcome back. It's your friendly neighborhood PM with your top 3 market points of the week. And we're talking earnings and some macro headlines yet again this week. So without further ado, let's just dive right in. Kicking us off at number 3, like I said, it's earnings, but this week it was all about Mag 7 earnings, where we had 5 out of the Mag 7 reporting. I'm talking Amazon, Microsoft, Google, Meta, and Apple. Largely strong results. It's not surprising from these Magnificent Seven that typically we see strong earnings, but the market had mixed results and mixed reactions to all these earnings reports. Namely, we saw Google surge over 10% after it saw continued growth in its cloud computing segment thanks to driving AI demand for its products. Now we are starting to see that Google is starting to see some of that ROI that the market had been asking for over a year now. So really good momentum behind Google. Now, on the flip side, we saw Meta stumble as they raised CapEx guidance yet again. Meanwhile, they are not nearly getting the same AI demand uplift that some of the other cohorts are getting either. So, once again, it's an evolving situation, and right now, Google seems to be in the lead. At number 2, it's an Iran war update. So, right now, the blockade that President Trump and the administration have issued is going to continue to remain in effect right now and could drag on for a number of months, is what some are reporting. This is due to the fact that both sides are pretty much looking for one or the other to yield first and foremost. And right now, Iran and their leadership has said that until the blockade ends, there will be no ongoing discussions or negotiations, and they will not be giving up their nuclear capabilities or their enrichment facilities. So right now, with the blockade still in effect, be expecting higher oil prices and more than likely higher prices at the pump. And then finally, point number 1, I had to give him a shout out. We've been talking about him for years now. It was Chairman Jerome Powell's final Fed meeting this past week. They did go ahead and leave rates unchanged, so no major changes up or down this week. However, there is a growing division amongst the Fed as to what the path forward is, as the vote was not unanimous. It was an 8-4 decision to keep rates unchanged. And this is largely because of the ongoing conflict in Iran and the macro headwinds that can introduce. Now, Chairman Powell has said that he's going to be staying on the Fed as a governor after his chairmanship ends and until the investigation into the central bank comes to a succinct conclusion. So you're still going to see him around a little bit, but Jerome Powell's tenure as chairman has finally come to an end. So thank you for all your work, and we'll see you soon. But that does it for your top 3 points this week. What are we checking out for next week? Well, next week, we're going to pivot back to macro headlines as we're keeping our eyes on the labor market. We have non-farm payrolls, the unemployment rate, trying to see if the ongoing geopolitical conflict in Iran starts to filter in here to the labor market stateside. Now, that does it for this week's video. As always, if you've got additional questions, please reach out to your financial advisor or dig into the written week in review. And if you do not have a financial advisor, please reach out, follow our link, and we'll get you happily connected with somebody. But as always, please go out, enjoy your weekend, and we will see you the same time next week. Thanks again.